Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, as always, great to have you on the Monday.
It's a great way to start my Monday as well. Thank you, Brian, for having me.
Now, Vishnu, let's start by taking a look at the crypto markets before getting your insights. Now, we'll start with Bitcoin. Bitcoin is at 34,330. It's down 1.19%. Ethereum is at 2,273. It's up 2.2%. Now, looking across regional markets, Bursa Malaysia, the FBM KLCI is at 1,527.65. It's down 0.37%. The SGX Straits Times Index is at 3,137.51. It's up 0.27%. The Nikkei is at 28,629. It's down 0.54%. Shanghai Composite is up 0.16% at 3,524. The Hang Seng is at 28,181. It's down 0.45%. And rounding off the numbers, we've got the ASX 200, which is at 7,316.9. It's up 1.1%. Vishnu, tell us, what's your view on how these mixed markets are performing this morning?
I'm inclined to steal your words, Brian. Mixed is a fantastic way to describe it. Also, I think what's happening in the markets is that the underlying tone of divergence is playing out even in the markets. No, not just in the story of the economy, but in the market. So, even as you had a so-called Goldilocks non-farm payroll number for the US, where the non-farm payroll jobs created was strong enough to boost the equities, but the unemployment numbers remaining, somewhat elevated was enough to send yields lower and give markets some comfort that the Fed did not move so soon, resulting in a slightly softer dollar. So these things in the US, but at the same time, we remember that the Goldilocks story has got three bears, and the bears made themselves and their presence felt in Asia. Clearly, COVID with its Delta variant playing out in the region, extension of MCO 3.0, Indonesia locking down on Bali and Java with the risk of countrywide lockdown, and cases proliferating and continuing to proliferate is one risk. We also have got other risks that continue to play out, which is the Fed may have bought itself some time, but taper is not going anywhere. It is just lurking around the corner, and that's something that markets have to deal with alongside higher yields. I think in the region, we get a mix of both factors playing. We've got a little bit of the reality check on COVID weighing on certain markets, whereas other markets are trying to piggyback the gains that we saw in US equities. Overall, I think a sense of caution will creep in because the US is not going to give us much indication today, given their 4th of July holidays. And so markets could start turning cautious a lot sooner.
Now, Vishnu, your video is switched off all of a sudden. Could you switch it on again, please?
Sorry, Brian, I'm unable to. I think. Okay. I think, I can't face the markets and the markets can't face me. My apologies for that.
Yeah, you were mentioning earlier that you were having tricky tech throughout the day today. So that's extended to this now. Now, Vishnu, then, you're back on now, strangely enough. Now,
I do apologize to the viewers.
Not a problem. Vishnu, the other thing that's an event this week is the RBA, which is going to be having its meeting this Wednesday on the 7th. What are the market expectations for that?
I think market expectations have diverged quite a bit. So I'm stealing the divergence mixed term again, but this is the fact. Because for a lot of the people building up into this, what the backstory was there's been a very strong recovery in Australia. Mining sector is doing well. Jobs recovery has been good. So a lot more emphatic calibration, if not pullback of QE was expected. So some parts of markets were expecting that the RBA would do away with QE, having already bought 200 billion of Aussie dollar worth of bonds. Some mixed feelings about the continuation of the yield curve control. But then Australia has just been hit with COVID again. So our sense is the RBA has sounded very dovish all along. In fact, they've pushed out rate hikes to 2024. That's a lot more dovish than the Fed is. So our sense is the RBA is going to scale back on QE, maybe just by 75 billion this time around, at the same pace of 5 billion per week. So not taking back on the pace because of the COVID outbreak right now. They need to assure markets, and YCC will also continue. So you'll get a dovish outcome, but exactly how that which iteration of that we get, I think there's a lot of variability around that, which means that translates into possible Aussie dollar volatility.
Now, we've got a lot of data for this coming week. We had a lot last week. What are the key things that you're going to be watching out for? We just had some data this morning from China, which is the PMI Caixin market number. That came in significantly lower than May's. May's was 55.1. Today's number, which was released this morning, was 50.3. What's your view on that, and what is the other market data that we should look out for throughout the week this week?
The larger narrative of a moderating China recovery has been baked into a lot of the expectations, incrementally baked in. So the sense is China was a first in, first out story, managed to contain it well. Manufacturing sector was nimble enough to cater to COVID demands. So China has done very well on the supply side. But the demand side has always been a little bit of a problem with consumers holding back. And now with authorities starting to clamp down on the property sector, there's a lot of uncertainty around it. So the slowdown is baked in, but the policy missteps or risks in perceptions, those are beginning to feature a little bit more. So there's a wider range of outcomes and bigger downside risks just from self-inflicted policy misinterpretations or the way it's executed. That's one particular risk. The other sense that's coming around is because of the Delta variant increasingly coming to the fore, some of the backward-looking data suggesting a recovery is taken with a pinch of salt, and really how jagged and bumpy this continuation of the recovery in Asia will be for the rest of this year, I think that becomes more of a question that markets want to chew on.
Now, Vishnu, as always, thank you very much for your insights.
My pleasure, Brian. Thank you for having me.
We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Thank you very much for tuning in.